What's going on, fam? So we're officially profitable again for the third week, I believe, and I have been calling the markets out to perfection. Guys, all I'm doing is just looking at the market. I'm not even really looking at the news. I'm not really paying attention to anything with the war. I'm just looking at the market. I'm just reacting off of what it's giving me, and I am executing. This is all you got to do. Just keep with your strategy. Just do exactly what you're doing. If it's working, keep doing it. And if it's not, then figure out what's going wrong. But of course, we've been dialed, we've been locked in. And let me just show you the trade that I took. Let's get into this trade breakdown ASAP, because tonight is going to be a battle. We are on Euro USD on the weekly time frame. And here, as you guys can see, we are back at this area of interest. Every single time we're below, we go down. Every time we're above, we go up. And looks like we are at this area again to go down. We have this humongous potential left head, right shoulder on the weekly time frame. I can draw it out for you guys here. We have a left ahead switch of structure, and we're here forming the right shoulder. What I would anticipate and expect is for us to get to this area here, break past it, retest the neckline, and then start pushing back down. Obviously, that would mean that the US dollar is getting stronger, and the way things are looking with the war and the way things are looking, I'm not sure if that's going to fully potentially happen, but we can definitely anticipate that this market is going to at least reach this area here, if not this round psychological level here. Now on the daily time frame, it looks even more clear how every time we get to this level we push down, every time we get to this level we push up, push down, push down, push down. And just like I have in my notes on the weekly time frame, going back to it, the previous week we have a massive doji candle. Massive. That means that it is very indecisive on which direction to go in. I would anticipate this to push down because we're at this very strong level of resistance. And on the daily time frame, we had a liquidity grab and we're starting to push down. Massive bearish candle. Now on the 4-hour time frame, what happens when we have a head and shoulder pattern? This is a reversal pattern, meaning if we're pushing up and pushing up and pushing up, once we get to this level, we're going to reverse down. As you guys can see, left head, switch of structure, right shoulder, again, higher high, higher low. We break past the low. Now we are bearish on the 4-hour. We come back, retest the neckline beautifully, and we start pushing down. Now what I was looking for on the 4-hour was that this candle were to close underneath this round psychological number 1.17500, and I was looking for the pullback from the next candle, which happened very perfectly. We had this wick pullback here. I would have entered there, but because we are finally on our new trading account, on our new brokerage account, where we are leveraging a 1-to-500. I just did not have the funds in my account during this time, but I would have 100%, 1000% entered off of this pullback here very perfectly. Left head, right shoulder, break, retest the neckline. We broke underneath round psychological number. We broke underneath this previous structure point. We came back, we retested the area of interest. I would have entered here. Now what I'm looking for is a better entry. Now because I have a high leverage account, of course we're going to risk a lot. We're gonna have tighter stop loss, bigger take profit, but of course we are going to do this very strategically. Now I'm not gonna sit here and enter this trade in this area here. If I would have entered here, obviously we'd be in profit and I wouldn't mind it coming back into break even, but that's not the case, because if I enter here and we come back to retest this area of interest once again, then that means we will be very deep in drawdown, and that is not what we want. What we want is to catch the momentum straight into profit, and if the market wants to push back up and retest here again, perfect, we'll enter and have a better entry point. But what I'm going to look for is a break and a retest under all this accumulation, and then I'll enter off the momentum. Guys, we want nothing but straight wins. We want nothing but straight profit. I will not mind having a lower entry point if that means that we are going to 100% have the move to the downside. So again, I'm not going to sit here and try to guess where the market is going. We already have done that. Now, if I would have entered up here, I would not worry about it, because if we come back to break even, it is what it is. If I were to enter right now and we come up in here, we will pretty much almost get stopped out, which we don't want. So we're going to be patient. We're going to sit on our hands, and we're going to enter off the momentum. Fam, we finally entered battle. And let me tell you, I was up all night. So basically, just like I said, we wanted to enter off the momentum, and we did. I entered a little bit early just because I was so tired. I wanted to enter the trade as soon as it broke the area that I was interested in. And once it did that, honestly, it did exactly what I said it was going to do. But like I said, I was up all night. I was tired. I just wanted to enter. Once I got the confirmation, then I fell asleep. And this is where we're at right now. So as you can see, this is where we were at last night. I was waiting for this to break and retest this accumulation on the 1 hour time frame, and it did just that. And another thing that I said it was going to do was that I was going to wait to enter after it broke underneath, because this still has potential to come up and retest this area. Exactly like I said, it came up, retested this area, and then came back down. As soon as it closed underneath this, I started to wait for a little bit more confirmation, and when it kept going down, I entered. Obviously, I entered early, like I said, because this was the retest of the accumulation that I was waiting for. So in reality, this should have been my entry, because I should have waited for the retracement. I should have waited for the break and the retest. Just like I said, as you can see, it retested perfectly. And this is where my entry should have been. Nonetheless, we broke down. We entered with the momentum, just like I said. And just right now, in these last couple minutes, we had this crazy wick down, and we started pushing back up. And I believe we're just going to come up, retest these wicks, retest this minor area, and then push back down. So this is a very emotional battle, just because this is my first trade on the high leverage account. So with that being said, we're going to keep going with our trading strategy. We're not going to change anything. We're going to wait it out. We don't want to hold for too long, because in the past we always hold for too long and it reverses on us. So in this very moment, we're just going to keep an eye on it. I have my alarm set, and we are prepared to win. Obviously, we don't have control if we lose, but like I said, I want to enter the trade once it's making the move that I'm anticipating, rather than trying to guess and gamble whether it's going to go down. So with that being said, let's just wait. All right, fam, we finally closed our trade on Euro USD. As you can see, it's still pushing down, but we took our profit. You're probably looking at the risk to reward and you're thinking, why would I settle for a 1 to 1.1? Well, here's the reason why. So like I said, I was gonna enter off momentum, and since I entered off momentum, I got a worse entry point than I would have and than I should have, let's be honest. But nonetheless, I have a really small account right now. It's about $300, and we flipped it to $450, so we made $150 off this trade. Now, yes, this is a really poor risk to reward. I would never do this on the regular, but this is the reason why. So again, left head, right shoulder, break, retest the neckline. I would have loved to enter off this push here and then have my entry up here, or I would have just waited for the retest of this area of interest, which we did twice, 1, 2. So these could have also been my entry points here. So I was waiting for the break and the retest of this minor area, and we actually got that very perfectly, break, retest. So I should have entered up here, but because it was really late, it was about 3 or 4 in the morning, I decided just to enter off the break, because if the candle closes underneath this level here, then we're bound to push down. So I didn't mind entering down here, just because I knew it was going to go down either way. And just like I said, we went like completely straight into profit after that. And again, just to give you another reason why I cashed out on the daily time frame, this is bullish, obviously. So the weekly's bearish, the daily's bullish, and the 4 hours bearish. So on the daily, we could have a potential higher high, higher low, and then come right back into this area of interest. And because the way things are with the dollar, I didn't want to risk that. And as you can see, every time we're below, we push down. Every time we're above, we tap and push up, tap, push down, tap, push down. and I didn't want it to tap into this area and start pushing up. So once it did it once, I was like, okay, cool, let's not risk it, let's just take our money. And again, if I would have entered where I was supposed to, this would have been a very perfect trade. I would have entered around here, stop loss above the area of interest, and take profit right before this blue line, just because I would be expecting a reaction from here. So if I would have just placed my trade how I was supposed to, we would have been sitting at a 1 to 2.5 risk to reward, which is a perfect trade. But because how things played out, and because I wanted to guarantee a win and I wanted to guarantee profit, I entered with the momentum. I entered in the middle of the move just so I can make that profit. So that's what we did, and that's what we got. And that is how you call out a trade, candle by candle, bar for bar, word for word, exactly like that, guys. Don't overcomplicate it, just follow the system, read what the market's giving you. And yes, I took a poor entry, but at the end of the day, straight profit, and I at least analyzed when to exit, because this is what happened. We got a reaction from the area, exactly like I said. So let me show you exactly how I'm gonna anticipate my next week's trade. AUD USD. I had a chat with one of my viewers about this market. Obviously the weekly is bearish, higher high, higher low, higher high. But the daily, in my opinion, I would consider to be bearish now. We have this high, we came down and made a new high, and then we broke previous low. So again, people see this very differently. Me, in my opinion, this is how I read it, because this high is higher than this high, and this technically is the new high. This is technically the new low. This would basically be breaking the previous low, creating lower low, lower high, lower low. Now again, that's just how I read it, and the reason why is because we are getting to this area of interest where every time we're below, we push down. Every time we're below, we push down, and every time we're above, we push up. To add on to that, on the 4-hour time frame, again, beautiful, beautiful. And I drew it out for you guys. Left head, right shoulder. We broke. Now I'm just looking for a retest of this area of interest, because once we're below, then we should start pushing down, and it's looking to do that exactly. Why is this a proper head and shoulder pattern? Because this is the higher high, higher low, higher high, and then we broke the previous low. So this right here is bearish now. This is the lower high, this is the lower low, this is the lower high, this is the lower low, and now we're just looking for the proper break, proper retest to enter this trade, AUD USD. More than likely will be next week, because it is currently Thursday. Might not have enough time for the move to fully execute, so this is going to be next week's trade, more than likely. And we're going to risk very high amount on this one, so that we can hit a very good risk to reward. If this move were to do exactly what it did last time, where it tapped into this area and came to the previous area of interest, then we would be looking at a very, very good trade. This would be a 226 pip move, and I would probably risk my entire account, which is about $400. So if we were to have a move looking something like this, and if it were to push down to the area that I want it to, or the area that I'm anticipating it to at least reach, even if it doesn't make it all the way, and if it reaches this minor area here, we're looking at a 1 to 5.6 risk to reward, which again, if I'm risking 400 times 5, guys, that is a big trade. And then of course, if it reaches down here, which would be ridiculous, a 1 to 9.7 risk to reward, that would be insane, guys. But tune in next week and I'll break down the trade and I'll break down my entries.